Everyone, and welcome to our panel. Actually, each one of us came from a different. Let's. We see more people are coming, so. Okay. Where did you came from? Until we will start. You came from Israel, Valley.
Technically, I came from New York.
Technically.
Yesterday, I was in New York. The day before, I was in Tel Aviv. But last week, I was in San Francisco, so it's not clear.
Okay.
We're not going to start if people are not sitting down, so... Oh, here, more people coming.
Okay. Okay, so hi everyone, and we are very happy to be here in Austin, and thank you for the IAC for this great conference. This panel will deal with driving innovation to the US, and while I was sitting, I saw a few Israeli founders of startups from early stage to ones that already did an exit. We'll mention them in a few minutes, and that's what this panel is about. We have here experts that we will hear from them about different things that relate to Israeli startups that are looking to expand to the US market. But before we will start, each one of the panelists will present themselves. We'll start with Shuly Galili, founding partner at UpWest.
Hi, everyone. Shuly Galili from UpWest. We're our seed and pre-seed fund based in Silicon Valley. We've been around for 10 years. We're managing $100 million in assets under management, investing in Israeli startups very early, first check, and helping many of them to expand into the US market and scale in their market.
Thank you. Yuval, managing partner at Symbol VC, and he is also one of the founders of Fundbox. So you did the transformation from a startup to a VC.
Thank you, Oded. Hi guys, Yuval Ariav. Before Fundbox, I headed product and research for Onavo that got acquired by Facebook, then started Fundbox. We have some of the first people from Fundbox sitting here, which is very exciting for me.
Even in the first row.
Yes, even the first row. Yeah, I mean, they know I would be upset otherwise. So, and then after Fundbox, I started investing. I recently set up my own fund called Symbol. We're first check investors. We only write the first check. $500,000 to $3.5 million, leading pre-seeds and seeds. Focused on Israeli founders, but wherever they may be. Our first deal was Israelis living in London. Our last one are people here in Austin, Texas, and in San Francisco. But we're looking at Israelis. That's our mandate.
Thank you.
Hi, everyone.
Oded.
My name is Oded Har-Even. I'm a partner at Sullivan, Worcester. I joined the firm in 2004. We are like a mid-sized firm, few hundreds lawyers in Boston, New York, Washington, London, and Tel Aviv. I opened the Tel Aviv office in 2020. Our specialty, we have been acting as a bridge for Israeli companies entering the US for 20 years now. Also major focus on public markets, and also worked with this nice guy for many years in different capacities of his, so happy to be here.
Yeah, thank you. It was a pleasure until you moved back to Tel Aviv.
Back and forth.
Yeah. So it's great to have all of you here. And before we start, I just mentioned that my name is Guy Franklin. I am the founder of Israeli Map in New York, which is Israeli. It's a platform that is mapping the Israeli startups that are operating in New York. It's an interactive map. And the fact I'm mentioning it is because in the last 6 months, we saw more and more Israeli startups that are coming to New York. I'm giving New York as an example. A few months ago, we just celebrated with a big party 400 Israeli startups only in Manhattan. And with that, let's...
Careful, you're in Austin. You have to be careful here.
Sorry, we'll discuss in Austin in a minute. So the first question is to Yuval. What is the right point in time for Israeli startups to expand to the US? That's a question that everyone asks, and I saw here in the audience Dan from Patricia and also Ravit. They are on back and forth and thinking about what is the right point in time to relocate to here.
Okay, so I'm going to be boring and spoil probably all of my next answers on this panel by saying that it depends. At Symbol, we're really focused on helping our founders get to product market fit very, very quickly as possible. Very, very often for many companies, what that means is that they want to be as close to the customers as possible. And so a lot of the time that would dictate logically that they have to move to the States as early as possible. Having said that, I think for many companies, especially kind of post-COVID and even slightly before that, it really does depend on what you're building. Some companies, I'll give you just an example of Fundbox. As smart as we were at Fundbox, people were using small business financing, probably a couple of centuries before we came along. And so the question of whether or not our market has demand and our whole product discovery journey was very, very simple. And so for us, moving to the States, even though we did that reasonably early, it wasn't the first thing we did. For us, that was a pretty simple journey. So I would say it really depends on the company. The shorthand I use mentally is that the more intense your product discovery journey is, and the more dependent on talking to customers that only exist here, the quicker you want to move here. For example, companies that sells to startups, they can start in Israel because there are a lot of startups in Israel, and in for some products, the sale is very similar. That's not true for all companies, but again, I think it really depends. Although the overarching thing is you want to move as quickly as you can.
Right. Thank you, Yuval. So that's the right point in time, but once they are here, there are many, many challenges that they are facing. Some of them they are anticipated, some of not. Shuly, what are the main challenges Israeli startups are facing when they are expanding to the US?
Thank you so much. Yuval just reminded me that their first meetings in the US were at our office in 2014.
So after we raised our Series A, when we started spending more time in the States, I think the first 2 consecutive days of any office in the States was in UpWest's, at least one of your offices.
Yes. So the challenges, I think that, so we've invested in over 90 companies. We currently have more than 40 companies that are headquartered in the US. Some of them started in Israel. At some point, they did the journey that Yuval and his co-founder did, and they decided that, the US is their main market. They need to be there early. And there are many challenges, obviously incredible opportunities, but I think the challenges that we see with founders who are looking to the US market is, number one, the separation from the engineering team in Israel, because what happens is that the CEO most often likely has to make that decision of, I'm going to venture into the US to be closer to customers and to build a go-to-market team. What does it mean? It means that you are leaving your CTO, your engineering, and the core product team behind, which could be less than 10 people. And you yourself moving, there are personal challenges of moving families, etc. But you yourself have to start from scratch, building an organization in the U.S., figuring out what talent to hire, figuring out, how do you actually do that? Who are the right people to hire for the first roles in the go-to-market, business development team, sales team. And there is a whole slew of other challenges that are involved in doing that. But I think that, what we're seeing is that the number one opportunity that there is to come and to be as close as possible to customers and get those early adoption and early customers to really, work with you is I think it's worth all the challenges that you're going through. I think that, proximity to investments and to growth investments is really important. And I think, as we've seen, that takes the company to the next stage. I think there is a mindset shift for a lot of founders who start in Israel and then they come to the US in terms of the scale of opportunity that they see in the market. I think their mindset shift in terms of how they think about their product, how they think about, growing bigger. And that's, obviously because you're in a place that pushes you to think bigger, pushes you to want to kind of think long term as well about your opportunities. So there are many challenges. I would say number one is basically definitely the separation from engineering and figuring out the communication back and forth. And number two is really building an organization of go-to-market from scratch.
Thank you, Shuly. So you discussed Har-Even and you talked about the business side. And there's also always the personal side that sometimes it's not easier. It can be very difficult, and sometimes I saw founders that got back to Israel because on the personal side it didn't work. Yuval, maybe you can talk about the personal side because you did this step while you were at Fundbox.
Yeah, so I think, we were, the investors on stage here, I think, we were early stage investors, and I think we talk a lot about product and technology and business, but I think we can all agree that startups very early are fundamentally like a human endeavor, and they're something that just turns from nothing to something, just based on the people who are running them. So I can tell you personally, when we started Fundbox, we moved Fundbox the headquarters from Israel to the U.S. The first thing we had was we had a dilemma whether we wanted to move to New York or to the Valley. We were a fintech company, and our notion at the time was if we were in New York, we would be perceived more as a financial company. If we were in the Valley, we'd be perceived more as a tech company, and so we chose the Valley. Those extra 3 hours in time zone difference make all the difference in the world. I can tell you that as somebody who basically did the back and forth between the Tel Aviv office and the San Francisco office the most very frequently, sometimes every couple of weeks. That takes a huge toll on your sanity, but that takes a huge toll on your social life, on your family life, on your connection with your friends. You're perpetually jet lagged. Now, the most founders and the best founders I know, the social connections, the family connections, these are the things that help them offset the intensity of startup life. And so you're adding to that intensity while simultaneously damaging these is something that's very, very difficult to contain. And so I think a lot of the challenge is being able to balance these two and actually being able to do that while maintaining your support networks. That's a very, very difficult thing to do, and I was happy to have an amazing team that supported me and my co-founders as well while doing that, but that's definitely the biggest challenge, I think.
By the way, it's not only for startups. I go on the airplane every other week, and I see also familiar faces always. There's certain people always, half of the flights are the same people traveling between New York and Tel Aviv, and Europe is a different issue because there's no jet lag, but New York and Tel Aviv, I don't know how you do San Francisco, by the way. This is...
It was before the direct flight.
Yes.
Yeah,
now you have Austin.
We have direct flight, yes.
Yeah. So, Oded, we discussed that one of the challenges are the funding, and you as an expert that deal with SPAC and IPOs mainly. In 2022, in 2021, we saw so many SPACs. And then most of the companies, the stock went down like 80, 90%. In the future, do you think that in 2023 we'll continue to see SPAC coming back? What do you think about the company that did it? Have they done a mistake, or it was a good tool for them still to raise money?
Okay, so I think, first of all, last time you and I were in the same panel, can you hear me? Was in 2020, and that was during COVID, and it was on Zoom. I think it was May 2020. And there was someone from American Express VC. She came, and people asked her, how do you invest in COVID when everyone are under lockdown? And she explained, we do it on Zoom. And everyone said, who wants a VC to invest in you? This is horrible now. So I don't know what you guys did like with COVID, but people didn't understand. Well, everyone were rushing into the capital markets because what happened in COVID, and that background is important, as you know. Everyone here heard about Robinhood, probably, but Robinhood, the app. And basically, you had 12, 13, 14 million Americans that were sitting at home and decided to get into the market and invest $10,000, $20,000, which in total is like hundreds of billions of dollars. And that was pouring into the market, and everything was going up. And suddenly I saw that one of my clients is Ariav, the CEO of Pluri, and he's I think sitting next panel with Adam Singolda from Tabula. So Tabula, for example, they took advantage of this enormous rush into the new gold was basically the capital markets stock. Everyone wanted to be public, right? So Tabula merged into a SPAC. I don't know if you know what SPAC is, like special purpose acquisition company. It's a shell company that is formed, raising money only for one purpose, to merge with the private company, and this way the private company will become a public company without doing what's called an initial public offering. So Tabula merged into a SPAC. The valuation was $2.5 billion, and they raised $500 million, I think over $500 million. Back then, it was an amazing valuation. So for Singolda and for his other shareholders and for the VCs or whoever that invested in the company, that was a great move. The dilution was minimal if you look at the valuation. Now, today, he's traded at a third of that valuation, right? A third. But so you have many investors that invested back then. I'm sure they're upset. They lost a lot of money. They're out of the market. But for him and for the investors that came with him, that was a great move. He still has the money. And let me break you the news. In capital markets, there's always a sunny day. There will be a day that suddenly, for whatever reason, it's something Biden will say, something that Singolda will say, something that will happen in the market, something that will happen to a competitor. Suddenly, the stock will run and valuation will catch up. But the idea is to take advantage of the opportunity, to recognize the opportunity and to take advantage of it. And by the way, many other startup companies did the same. The Tel Aviv Stock Exchange was a market that no technology company wanted to go public on the TASE. In 2020-21, it was like every other day another company went public. Now those companies today, you were talking about 2023, they're starting to run out of cash. So 2021 and 2020, a lot of startup companies became public. Now they raise money, but they spend the money. They thought everything is going to be like that forever. And guess what? It's not. So now what happened in 2023, I think we'll see a lot of consolidation in the industry. I think we'll see a lot of SPAC companies that merge into SPACs, basically now in low valuations. Not everyone were lucky like Singolda. Some companies raised less money. And we'll see that they're unable to sustain operations. And either they're going to raise money in a very low valuation with very dilutive and almost poisonous capital structure, or they will merge with another company. So those companies that raise a lot of money and maintain the money, now they'll use the money to buy other companies. So we'll see consolidation. We'll see what's called backdoor IPOs, meaning a lot of companies that will become public through merging with those companies that didn't survive. So we'll see change, new blood basically coming in. So this is like circle of life in Wall Street.
Interesting, nice. So in addition to what Oded mentioned, Shuly, what are the other ways of investments that are available for startups and now are relevant in 2023? Because there are like founders here that it's relevant for them.
So, I think that definitely where Yuval and I invest, we invest very early. We first check investors in a lot of companies. And I think that when founders think about, their first financing, raising their first money, things have definitely changed. I think that we're going back to basic. 2020, 2022, I was at 2021, part of 2022 were really insane in our line of business. Because we're investing so early, we invest in people. Number one is the founders. And when there is so much exuberance in the market, there is no time for us to actually get to know the people that we want to invest in. And I think that today we have an incredible opportunity, not only because we see great founders that start, they're scrappy, they're more resilient. I think that, this is the opportunity to actually invest at seed and pre-seed. But I think that there is also an opportunity for investors to really get to know who they're investing in. Because what happened in 2021 was crazy. You meet a founder and 2 days later, 5 term sheets and you don't have even
And he's
time.
A billionaire.
You don't have time to decide. So this is really a great time because we have the opportunity to evaluate, to run a proper due diligence on the market, on the founders, on the opportunity. when you raise seed investments, and I think that for founders who are looking to raise pre-seed or seed between, I would say, $1 million to $3 million seed, the first check often comes from your local environments. And I always say seed is local. Seed is the people who know you, is other founders, it's angel investors, it's people who can really bring a lot of value to you as you build the companies. Later on, when you start to get a lot more traction in the market, you start to bring more customers, you start to, sell, have some revenues, it's the right time for you to go and raise Series A. If we look at the US landscape in terms of venture capital, hundreds, if not thousands of VCs, and no check is similar to another. I mean, you really need to evaluate the fund, you need to evaluate the angel investor that invests in terms of what value that person or that fund can bring you, whether it's in your business or your industry that you're looking to raise money in, and whether it's in the geography that you are at, whether it's the company building knowledge and value that that fund or that angel investor can bring you. We are seeing a lot of funds today that are more focused on a certain vertical. And I think that for a lot of founders, raising money for healthcare companies or for ag tech companies or for, fintech companies, there are really investors who are, specifically investing in that space. So I think for every stage of the company building, there are the kinds of investors that make sense for founders to reach out to. It's going to be, I think, very tough year for founders at many stages to raise money. I mean, I can tell you that I already see how Series A and B are a lot more challenging. You need to show a lot more proof. You need to get to a lot more, validation with the market in order to convince investors that this is really right for them. The offers at the table are, cut 30% of what, the offers were in 2021. So you have to really agree with yourself that, in fact, you are willing to take such dilution. And I think there are many programs and many things around that founders can join at the very early stage in order to get a lot more validation, get a lot more network in their industry, and then figure out exactly, how to scale from there.
Okay, thank you. We have 5 minutes left. Now I'm going to ask you the question that I think that most of the founders that I meet in New York, they ask me the question, what is the location for them to expand, New York or the Valley? And I think in the last, since COVID, it's also became like Austin or Miami. And I'll just give an example. We have here Amos Stern. He sold his company Simplify a year ago for $500 million to Google. I know him from day one when he moved from Israel to New York. And then, during COVID, he moved to Austin, so he lived nearby. So,
but that there's no answer to that. It's very subjective. It depends on the personal issue. Like he said, where's your family? Correct. Where are your friends? Mm-hmm. Then it goes to where are your investors? And then it goes to where's the ecosystem? Where are your customers?
Where the clients, I think, is the most...
So I know we all, because the ISC is in Austin, everyone will talk about Austin. I love Austin, great place. But
Austin is number one.
It depends. California is good as well, and New York is good as well. It depends where you are and where's the ecosystem, where are the partners. That's the end of it. And the personal life.
I think that, because we are based in California and in Silicon Valley, and I've seen a lot of companies coming through and building at scale in that ecosystem, there are certain ingredients in that ecosystem that it's very, very hard for other ecosystems to replicate, and it still exists. And I think that the getting quickly to early adoption in the area has been really easy for a lot of companies for a reason, because of the high concentration of companies, of potential customers, of early adoption of mid-sized companies, as well as potential acquirers and investors. It's really, I think, a unique ecosystem. However, as Yuval mentioned, there are many challenges as well. The challenges of time zones. You really need to agree that this is going to put a dent in your lifestyle, and that's how you're going to work. I've been working like that for 20 years, and I could tell you that, I figured out how to do my time zone calls with Israel. I think that what I see today is what COVID allowed for is for so many other ecosystems like Austin and North Carolina and Nashville, where we actually see, pockets of ecosystems that, it's really great to be there. But I do believe in the community. I do believe that founders who surround themselves with other founders from the community will do better. And I do believe that being close to your customers is the most important thing. So if your industry is oil and gas, go to Houston. If your industry is in healthcare, Boston would be a great place for you. Because you do need that initial access to the market.
I'll try and sum up the two things, and probably what I would say is you should probably not be making this decision based on what people say on panels. And the reason
is that because of what I said?
No. The reason is that I think all of us here, we are very breadth-oriented. We look very broadly. Whereas these decisions are very important, and you should be making them after a very deep analysis. And I think it's not, what I said earlier, it's not about any of the people sitting here. I think each of them would be a great help to you if you sat them one-on-one, and they would be able to have a conversation and to diagnose your specific situation, your company's specific situation, and give you that advice. And I think that would be my advice. Take like any of us here who have, Shuly is way more experienced as an investor than I am. But take any of us here, people who have seen companies at scale, people who have, operated companies, people who have invested for the last 10, 20 years, people who are aware of, they know what they know and what they don't know, they know what their blind spots are, and just sit with them on one-on-one conversations and let them help you diagnose your situation and make that decision accordingly. Because this is arguably one of the toughest, or the most important decisions you'll make, the most critical to how successful you'll be, both in your personal life and in your business life. And so I suggest to you, have these conversations one-on-one with people that can really help you diagnose. That's the key thing.
But I want to add one more thing about that, because many companies, when they come to the US, they think they have to do it right. So I'll choose this place, like you're saying, based on, I don't know, what they hear in panels or what they hear with certain people. And also I'll hire those persons. And many times companies, sometimes even they change the nature of their nature. Okay, and what is their real essence, because they want to do something right. Okay, and then sometimes I saw companies that sometimes bringing management people here that are unfit because they thought, these, and nothing wrong with Americans, to the contrary, but they thought I need to replace the CEO into an American CEO, or not because my Israeli CEO is not good, but because I need an American CEO, or I need to be here and that's a mistake. Every company has its own reasons and his own issues and considerations, and you have to think about it this way. There's no magic here. So.
Okay, so with that we will finish. I would like to
We know where to go when we're in New York. We're visiting you.
Oh,
right.
The same each one of us. We will be happy to host you in New York, the Valley, New York, Tel Aviv, New York. So thank you very much, Shuly, Yuval, and Oded.
Do we take questions?
And
thank you very much.
And enjoy the rest of the
conference. There is a microphone.
Thank you.